Welcome to the Deep Dive. We're here to unpack some really compelling sources and hopefully bring you pure, actionable insight. Today, we're diving deep into this idea of, well, KonMariing your finances. Imagine your money, right? Not as some sad pile stuffed in a drawer somewhere, but like a super motivated team, tiny employees, all working hard to make you more money. Our mission today, give you a shortcut, basically, to becoming their boss. A really effective boss, making sure every, financial decision actually sparks joy long term. And we've got a fascinating mix of stuff for you today. We're going to look at a really personal financial journey, uncover some surprising strategies from a, quote, minimalist millionaire guy, built an empire but never owned a home. And we'll even pull some unexpected wisdom from a classic Hollywood film. It's all here to help you reshape your financial future, maybe even redefine how you feel about money.
Absolutely. And this deep dive, it's really about empowerment, isn't it? It's about shifting your mindset, moving away from worry or just passively accepting things towards active control. Seeing money as this powerful tool that you can, wield intentionally. We're focusing on insights, actionable wisdom, really, to help you build that financial freedom you've been thinking about, moving beyond just piling up cash to, well, purposeful wealth.
Okay, so let's unpack this. We start with a really compelling personal story. Our first source introduces someone who says, very honestly, that money talk used to make them as uncomfortable as wearing socks with sandals, which, yeah, universal cringe.
Oh,
Yeah.
definitely.
But-
Socks with sandals.
yeah. And this wasn't some like early career thing. It was a big mid-career realization,
Yeah.
driven by wanting a better life for their family. They just couldn't stand the thought of being stuck with just one monthly salary, especially with those awful bank interest rates doing, well, nothing. They felt this growing unease watching friends, families struggle, caught in that paycheck to paycheck cycle. They knew they had to find another way.
That feeling, that initial fear or awkwardness around money talk, it's so common. It feels like something we should know, but nobody really teaches us properly. What's powerful here is how that fear gets pushed aside by a really clear why. Once that motivation, like providing a better life for your family, gets sharp and clear, it becomes this incredibly strong force. It cuts through the hesitation and gets you moving, even if the first steps feel, small, tentative.
Absolutely.
Yeah.
And their first steps were really small, almost laughably small, they say. They found out about robo-advisors, which is a totally new concept to them back then. For anyone listening who's not familiar, a robo-advisor is basically an automated financial advisor. Uses algorithms to manage your investments based on your goals, your risk tolerance.
Like a digital planner almost.
Exactly. Low cost, does the heavy lifting, portfolio stuff, rebalancing. They started with just like $50 or $100 a month using something like Stashaway. But here's the thing, they kept doing it month after month. It wasn't about getting rich quick, just quiet, consistent commitment.
And that consistency, that's where the magic really happens, isn't it? What's so fascinating is how this marathon of small, consistent steps can lead to really significant results, transformative even. It just perfectly shows the power of compounding and building habits by consistently investing even tiny amounts over time. You don't just get your money growing on itself, you build this powerful habit, financial discipline. Now they're seeing monthly dividends just roll into their bank account. And that goal of hitting, say, $5,000 a month, it doesn't feel like a fantasy anymore. It proves that small, consistent effort really does build this exponential momentum, turns possibility into something real.
And where this passion came from, as they share it, it's incredibly human, deeply rooted in empathy, really. It started from fear, yes, but also from just watching, seeing friends, colleagues, family struggle with their finances, caught in that endless cycle, paycheck to paycheck.
You see the stress.
Yeah, the stress, the anxiety, the missed opportunities, they saw it firsthand. And that experience just solidified their mission. Show people that financial freedom isn't a fantasy. It's a journey you can start today.
It's a powerful call to action, Reminds us that change often starts with that one, maybe slightly scary, first step. So this whole journey led our author to figure out what they call timeless truths for building wealth. These are the principles they admit they used to roll their eyes at, thinking, oh, here we go again, same old stuff.
Right. Heard it all before.
Exactly. But now, because they actually live it, because they've seen the results themselves, they get how profound these truths really are, how much they actually work. Okay, first truth. Sounds simple, but often the hardest bit. Start somewhere, even small. Whether it's $50 or $100 or, leftover coin jar, the amount isn't the point. It's the courage to begin.
Yeah.
You don't need to be an expert, don't need a pile of cash. Just start. That really clicks with the behavioral science around habits, the biggest hurdle isn't how hard the task is, it's just the inertia, not starting, that fear we talked about. Often the only way past it is taking that first tiny step. Doesn't matter how small it feels, it's about proving to yourself you can do it. Breaking down that mental block, showing that consistency beats starting capital, you know? It kicks off that positive cycle.
Exactly. And once you do start, the second truth kicks in. Grow your wisdom and knowledge. Our source calls it having cheat codes for life. The more you understand how money works, the more control you have.
Yeah.
But how do you practically grow wisdom? It's more than just reading a book or two, right?
That's a great question, because it's not just about soaking up information. It's about actually using it, applying it. To really grow your wisdom, you've got to actively engage with your finances. So, say you set up that first robo-advisor. Don't just set it and forget it completely. Maybe, look at the monthly reports. Try to understand what an expense ratio means. Or figure out how different things like stocks and bonds behave when the market goes up or down. Follow financial news, but with a critical eye. Find sources you trust. Maybe join a community. Talk strategies with others. This kind of active learning, it turns abstract knowledge into something practical, something you can use, builds up your financial literacy muscle.
Makes sense. And then the third truth, this really brings it all together, know your why. This isn't just some vague idea. It's that deep personal reason that pushes you when Netflix shopping apps or that new coffee machine try to derail you. It's your anchor, right? Your guide when you're choosing between instant gratification and those longer-term goals.
And if you connect that to the bigger picture, the why isn't just motivation. It's like a compass for making intentional financial choices. It helps you prioritize, not just your spending, but your saving, your investing, making sure every dollar lines up with your long-term goals, not just some fleeting desire. It creates a filter, really. If something doesn't fit your why, it's easier to say no. That's the heart of purpose-driven wealth, building connecting money to your core values.
And the author offers this really powerful reassurance, which I think is so important for everyone listening. If I could start only in my mid-career, anyone can. It's never too late. And if you're young, even better. But if not, don't let age stop you from chasing financial freedom.
That's just such an empowering message, isn't it? Takes away any excuse about lost time or missed chances. It's all about grabbing the present moment. Okay, now here's where it gets really interesting, maybe a bit counterintuitive. We usually think wealth means accumulating more stuff. Bigger house, fancy car, endless gadgets. But what if less is actually more? Our sources talk about the less is more money hack. Basically, cutting clutter means more cash for the things that actually matter. It even mentions tackling things like high-interest credit card debt, that's major financial clutter, can free up serious cash that was just vanishing into interest payments.
Right, reclaiming that money.
Exactly. It's not just tidying up, it's reclaiming your financial power. And this philosophy leads us to Timothy Armu, our minimalist millionaire. Co-founder of Fanbyte, sold his company for 8 figures in 2022. Big money.
8 figures, wow. But his lifestyle, totally unconventional. Despite all that wealth, he doesn't own a home, he doesn't splurge on luxuries. His biggest recent treat, get this, a business class ticket for him and his ex-girlfriend.
That's not the typical millionaire picture, is it?
Not at all. So what's driving this really unique approach?
Well, what's fascinating about Armu is how deeply his scarcity mindset affects him. It was shaped by growing up in public housing in South London. That background gave him this deep, almost gut-level appreciation for financial security over just stuff, material possessions. It's not about depriving himself. It's more about a laser focus on what really provides long-term stability, long-term opportunity. And this mindset drives his discipline. He tracks every penny, invests really strategically, making sure his wealth gives him freedom rather than being locked up in things that lose value.
It's a totally different way of thinking. Let's break down Armu's specific strategies because there's a lot to learn here. First, he prioritizes safe investments, builds a solid foundation with things like index funds, bonds, government securities, cash. Now, why are those specific things considered a safe foundation, especially for someone already wealthy?
That's a great question. These are foundational because they offer diversification and, relatively speaking, stability. Index funds, for example, give you broad exposure to the market, usually with low fees, reduces the risk of any single stock bombing. Bonds, government securities, they're generally less volatile than stocks. They give you a predictable income stream, kind of like ballast against market storms. And cash, well, cash gives you liquidity, options, opportunity. For someone like Armu, with that deep need for security, these aren't just investments, they're like emotional safeguards. They let him take calculated risks elsewhere without risking his core financial stability.
Okay, that makes total sense. But then he also seeks high-impact investments, what he calls exotic choices. Things like avocado, soybean, and mango farms in Africa. Even uranium and lithium ventures. These sound pretty niche. Maybe risky.
Yeah, they definitely sound exotic.
What's the principle he's applying here? And, how does someone even get into those kinds of investments without huge amounts of cash or specialized knowledge?
Right. That's where his deep understanding of markets really comes in. The core idea is often about spotting big global trends, macro trends, and understanding supply chains, commodity cycles. So investing in farms in Africa, that could be a bet on population growth, rising food demand, maybe undervalued land or labor. Uranium and lithium, clearly tied to the green energy shift, electric cars, battery demand. Getting access usually means either having very specialized knowledge yourself to invest directly or getting into private equity funds or venture capital firms that focus on these specific areas. It shows that once your basic security is covered, diversifying into these uncorrelated, maybe high-growth strategic assets can be a powerful way to accelerate things.
Fascinating stuff. Okay, next. He consciously cuts the clutter in your finances. Streamlines spending, reduces impulse shopping, less noise. And that saved money goes straight into investments.
For the average person listening, what are some practical tricks, maybe even slightly funny ones, that actually work to stop those impulse buys and cut the spending clutter?
It's a battle, isn't it? The impulse buy. One really effective trick is the 24-hour rule. For anything non-essential, see something you want, wait 24 hours. Often the urge just fades.
I like that.
Another one is making savings automatic. Pay yourself first. Set up automatic transfers to your investment account right on payday. Then you're not even tempted to spend it. And don't underestimate a good subscription audit. So many people pay for 6 streaming services or apps they hardly ever use.
Guilty.
Right. Review them. Cancel ruthlessly. Watch that cash flow back into your investment account. It's all about creating friction for spending and making saving easy. Friction for spending, ease for saving. Love that. He also focuses on long-term value, investing in things that go up over time, stocks, businesses, even those unconventional farms, instead of things that depreciate. And finally, he emphasizes increasing financial discipline, tracking every single penny.
Because knowing where it goes leads to better choices.
Yeah, what's really compelling about Arma's whole approach is how it boils down the core message of minimalism. It's not about depriving yourself. It's about being intentional with your money. It means ending up with more money, more freedom, and more control over your future. It flips the usual idea of wealth upside down, shows that less stuff can genuinely mean more security, more opportunity. It's about aligning your resources with what you actually value. Okay, let's shift gears a bit. Look at other powerful ways to grow wealth beyond just traditional investing. Our sources really push you to stop relying on one paycheck, which, makes so much sense today. The economy feels so volatile sometimes. Diversifying your income, it's key for resilience. Now, the idea of juggling multiple income streams sounds great, but comes with this warning. Juggling multiple income streams is like herding cats. It can get messy fast.
Oh, I can imagine.
Right. That's why one source highlights needing a secret weapon for keeping your finances tidy, specifically mentioning good bookkeeping, especially if you're a creator. But what kinds of income streams are we even talking about here, and why is bookkeeping so vital for creators?
That herding cats analogy is perfect, isn't it? Because it can feel chaotic. When we talk multiple income streams, it's broader than just a second job. Could be monetizing a hobby selling crafts online, maybe, freelancing your professional skills, starting a little consulting gig. Even passive income from investments counts. For creators, bookkeeping is non-negotiable because unlike a regular salary, income can be really irregular. Expenses might be all mixed up with personal spending. Good bookkeeping helps you spot tax deductions, track which streams are actually profitable, understand your cash flow. It basically prevents that messy, overwhelming feeling, turns the chaos into clarity, gives you a clear financial picture.
That makes perfect sense.
Yeah.
A single income stream is like that wobbly chair, right? One leg breaks, down you go. Diversifying adds stability. Okay, another powerful strategy mentioned is dividend snowball investing. Teaching you how to build a passive income stream so powerful it grows on its own, like a snowball rolling downhill, except this one is made of money. Love that image.
It's a great image.
The source mentions patience, and clever strategies are the secret ingredients. So what are some of those clever strategies, and how does this snowball thing actually work?
That snowball effect. It's genuinely powerful. The core idea is using dividend reinvestment plans, often called DREPs. So instead of taking dividends as cash, you automatically use them to buy more shares of the same stock or fund. This increases your share count, which means your next dividend payment is bigger, which then buys even more shares, and it just keeps going. It's a virtuous cycle.
Yeah, okay.
Clever strategies. Well, choosing companies with a long track record of increasing their dividends year after year helps. People call them dividend aristocrats or dividend kings, or
Yeah.
investing in sectors known for steady payouts like utilities or consumer staples. It really comes down to disciplined, long-term investing using that compounding power to accelerate your wealth building.
Wow. Imagine your money literally making more money totally on autopilot. And of course, we have to touch on real estate as a way to build wealth. But the sources warn, buying rental property, don't get conned.
Important warning.
Yeah, it's crucial to learn the 5 key indicators of a profitable rental property so you don't end up with a bad investment. You want a money-making machine, not a money pit. Can you give us maybe 1 or 2 of those key indicators and why they're so vital?
Absolutely. Probably the biggest one, indicator number 1, is positive cash flow. Simple concept. After all your expenses, mortgage, taxes, insurance, repairs, maybe property management fees, you still have money left over each month. If it's negative cash flow, you're basically paying to own the property. You're subsidizing it, not profiting. That's a big red flag.
Okay, crucial. What's another one?
Another huge one is location and tenant demand. Is the area growing? Are there good schools nearby, shops, parks, job opportunities? A desirable location means you'll find reliable tenants more easily, and you can probably increase rent over time. These aren't just nice-to-haves. They're fundamental to whether the property will actually make money.
Got it. So putting this all together, what does it mean for developing critical thinking as you navigate your finances? Surprisingly, one of our sources points to the movie American Hustle for some serious financial wisdom.
Really? American Hustle. Okay.
Yeah. The film's big idea is this stark reminder. The line between con artist and honest man is a blurry one, and everyone is trying to sell you something. It's called a masterclass in persuasion manipulation. Shows how chasing the American dream can push people into, well, questionable territory. It really makes you think about who you're trusting with your money, doesn't it? Could be a slick salesperson, some guru online, even influencers. The film kind of forces you to question motives.
Okay, that raises an important question then. How does that film's lesson translate directly to navigating the actual financial world? It teaches us that in finance and in life, things are rarely what they seem. That good deal might actually be a cleverly hidden trap, and a really flashy persona or someone pitching with way too much confidence. It could be hiding a mountain of debt or just a basic lack of understanding. It's kind of a funny but high-stakes lesson in doing your homework, your due diligence, and trusting your gut before you jump in. It pushes you to look past the surface, beyond the hype, and really evaluate the underlying value and, crucially, the risks.
The action step from this source is brilliant, and I think everyone can use this.
Yeah.
The next time a can't-miss opportunity lands in your lap, especially if it promises crazy returns for zero effort, ask yourself, what's the hustle here?
Good question.
Dig deeper. Do your research. And then there's this funny tip from the source. If the person selling it has a truly wild hairstyle, maybe run the other way.
Haha, okay, noted.
Just kidding. Mostly. But seriously, if it sounds too good to be true, it almost always is. And speaking of money and things not being what they seem, here's a fun fact from our sources that illustrates a deeper point. The monopoly money myth. Apparently more monopoly money is printed each year than actual real money throughout the entire world.
Wow, is that true? That's fascinating. And that little tidbit actually holds a real financial lesson, connects right back to critical thinking and understanding the game. It reminds us that the most valuable money isn't always the physical cash in your wallet. The real key to building wealth is understanding the game you're playing, whether it's with colorful paper or your own investment portfolio. It's about realizing that true wealth is often built not just on the currency you hold, but on the assets you control, the knowledge you have, and the strategic choices you make. It's about leveraging assets, understanding how value works systemically, having a plan, not just piling up physical cash.
Okay, so let's recap this deep dive. We've explored how to KonMari your finances, starting small, being consistent, aligning decisions with your real purpose. We looked at how powerful knowing your why is and embracing that minimalist approach to wealth, seeing how less stuff can actually mean more freedom, more control. We diversified our financial toolkit, looking at multiple income streams, harnessing that dividend snowball effect, and approaching real estate smartly with critical thinking. And finally, we sharpened our critical thinking, learning from unexpected places like American Hustle to question those can't-miss deals and spot the hustles out there.
Yeah. Ultimately, building wealth isn't just about hitting a certain number. It's about being intentional with every financial move, understanding the underlying game you're in, and aligning your resources with what truly matters to you. It's about making informed choices that lead to genuine long-term security and ultimately freedom.
So think about this. What does financial freedom really look like for you? Beyond just a number in the bank, is it time, security, the freedom to chase passions, something else? And how could applying just one insight from today, starting small, decluttering your spending, questioning that next big opportunity, how could that change your path towards it, starting right now? We'll leave you with a powerful question from one of our sources. What's one small step you can take right now to get in the game and start taking control of your financial future?